Hello and welcome back to UK Finance Explained. In our previous lessons, we've looked at payroll deductions, payslips, gross pay and net pay. Today, we are going to look at another important part of UK payroll, tax codes. If you've ever looked at a payslip and seen something like 125.7L, you may have wondered, what does this number even mean? Why does an employee have a particular tax code? And how does the tax code affect the amount of tax they pay? By the end of this lesson, you'll understand what a UK tax code is, what the most common tax code means, and why payroll professionals need to use the correct tax code. Let's start with the basics. A tax code is used by an employer to work out how much income tax should be deducted from an employee's pay. So HMRC provides tax code to employees and employers. The employer then uses the tax code when processing payroll. So in simple terms, tax code determines how much income is deducted from pay. It's important to understand that a tax code is not the amount of tax an employee pays. Instead, it helps payroll determine how much of an employee's income should be taxed. One of the most common UK tax codes is 1257L. You will often see this code on employees' records and payslips. But what does it mean? The 1257 generally relates to tax-free personal allowance of £12,570 for the year. And that is for someone entitled to the standard allowance. So the 1257 equates to 12,570. Okay. And then the L indicates that the employee is entitled to the standard tax-free personal allowance. So broadly speaking, a tax code of 1257L tells payroll that the employee has the standard personal allowance. However, it's important not to think of the number simply as the amount of tax-free pay this month. Payroll calculations are based on the employee's circumstances and the tax basis being used. Tax codes aren't necessarily permanent, so employees' tax code can change for several reasons. For example, HMRC may update someone's tax code because of a change of income, a change in employment circumstances, benefits provided by an employee, tax owed from a previous year, changes to an employee's personal allowance, or even starting or leaving another job, even other information HMRC has about the employee as well. So when HMRC changes a tax code, the employer normally receives an updated notice. Then the payroll team will then need to update the employee's payroll record on their end. Let's look at some examples. So obviously the first one would be 1257L. This is a standard tax code for many employees who receive the standard personal allowance. BR stands for basic rate. This code generally means all income from the particular employment is taxed at the basic rate. It is commonly seen when someone has more than one job. The D0, that is generally means all income from the employment is taxed at a higher rate. Again, this can be relevant where an employee has multiple sources of employment income. D1, this means income is taxed at the additional rate. 0T means no personal allowance is being given through that employment. There can be several reasons for this. For example, HMRC may not have enough information to allocate an allowance, or the employee may already be using the allowance elsewhere. And the K codes. You may also come across tax codes beginning with K. K codes are used when certain deductions or taxable benefits exceed the employee's available tax-free allowance. This can increase the amount of taxable pay used for calculating income tax. Another term you may hear in payroll is emergency tax code. This doesn't necessarily mean the employee has done anything wrong. It usually just means that he or she does not yet have enough information to give the employer the employee's normal tax code. So, for example, this can happen when someone starts a new job and the correct tax information hasn't yet been received. So an employee may temporarily be placed on tax codes such as 1257L W1 or 1257L M1. The W1 or M1 indicates that the tax calculation is being operated on a non-cumulative basis. This can result in an employee paying a different amount of tax than they would under a cumulative tax code. So once HMRC provides updated information, the tax code may be changed. So this is an important concept for payroll professionals. A cumulative tax code takes previous and tax deductions during the tax year into account. A non-cumulative code, such as one ending in W1 or M1, once we looked at earlier on, generally calculates tax based only on that the current pay period. So let's use a simple example. Imagine an employee starts a new job halfway through the tax year. If payroll has limited information about the previous earnings and tax, the employee may initially be placed on a non-cumulative basis. Once HMRC provides the correct information, the employee's tax code may be updated. This is one reason payroll professionals need to monitor tax codes changes carefully. A payroll professional shouldn't simply guess an employee's tax code. Tax codes are normally provided through information from HMRC. So employers may receive tax code notices electronically through HMRC systems. The payroll professional should then update the employee's payroll record and use the new code from the appropriate date. This is extremely important. Using the wrong tax code can result in an employee paying too much or too little income tax. Let's imagine we have an employee called Emily Brown. A payslip shows tax code 1257L. This tells us that the payroll is using the tax code provided for Emily's employment. The payroll system then uses the information when calculating her income tax deduction. So remember, gross pay, then you have your tax code and tax rules, then you have your income tax deduction, and then your net pay. This tax code is therefore one of the inputs used during the payroll calculation. When processing payroll, you should make sure that the employee's tax code is recorded correctly. The tax code matches the latest information available from HMRC. Any tax code change is applied from the correct date. The payroll software has been updated correctly. The resulting income tax deduction looks reasonable. Any unusual tax calculation is investigated rather than ignored. Payroll isn't simply about entering numbers. It's about making sure the right information is being used to produce accurate pay. Here are some mistakes beginners should watch out for. Mistake number 1, assuming everyone has the same tax code. Not every employee will have 1257L. Tax codes depend on individual circumstances. Mistake number 2, ignoring a tax code notice. If HMRC provides an updated tax code, it should be reviewed and applied correctly. And then we have manually changing a tax code without justification. Payroll professionals should use the appropriate information from HMRC rather than guessing what an employee's tax code should be. Mistake number 4, assuming a tax code tells you the employee's tax rate. A tax code is used to calculate income tax. It isn't simply a label for the employee's tax rate. Mistake number 5, forgetting the tax basis. A code such as 1257L can operate differently depending on whether it is cumulative or has a suffix such as W1 or M1. Let's quickly review what we've learned. A tax code helps an employer calculate the correct amount of income tax to deduct from an employee's pay. 1257L is a common tax code associated with the standard personal allowance. Other codes include BR, D0, D1, 0T, K codes as well, and these are used in certain situations where deductions or taxable benefits exceeds available allowance. Tax codes can change and payroll professionals need to apply updates correctly. Most importantly, don't guess tax codes. Use the information provided through HMRC and apply it correctly. Now it's your turn. Imagine you are processing payroll for 3 employees. Employee A, 1257L, Employee B has the tax code of BR, and Employee C, 1257L, M1. Your task is to answer which employee appears to have the standard personal allowance. Which employee is using a basic rate code? And which employee is using a non-cumulative basis? Pause the video and write down your answers before continuing. Please comment below with all your answers. And that's the basics of UK tax codes. You now understand what tax codes are, why they matter, some of the most common codes you'll see, and why payroll professionals need to pay close attention to tax code updates. In the next lesson, we are going to look at another major payroll deduction, national insurance. If you are following along with the UK Payroll Fundamentals workbook and activity card, complete the tax codes activities to test your understanding. And if you haven't downloaded the workbook yet, it includes a practical or it includes practical exercises, case studies, quizzes, and real-world payroll activities to help you build your UK payroll knowledge. So don't forget to subscribe to UK Finance Explained for more beginner-friendly UK finance and payroll lessons. Thanks for watching, and I'll see you in the next lesson.